Well, hello, everybody, and welcome to this episode of the ESG and Tech Show. My name is Susan Hayes Cullerton, and I'm delighted to be with you here today to have this conversation all around cloud collaboration. Now, I have to tell you, this is a topic that I have been looking at for some time because I think there is a lot of conversation around this, and people often talk about, cloud collaboration from the point of view of have we reached where we can actually go? Have we got to as far as we can get to when it comes to cloud collaboration? And personally, I think it's really worthwhile looking at what's going on in this area, seeing what has happened, but also seeing what's happened when companies have not kept up to date with this big, massive, not just trend now, but uh, expectation that has become status quo. So, like I say, you're all really welcome today to the ESG and Tech Show. My name is Susan Hayes Cullerton, and I'm, as I say, always delighted to be here to welcome everybody to the show. Just before I get started, I'd love to hear where you're tuning in from, what part of the world, and this is always an area that intrigues me. I'm always intrigued to see where exactly people are joining us from and what part of the world that you might be sitting having a coffee, or you might be having breakfast, or you might be having your dinner, or you might be having your lunch. So please do pop it there into the chat and let me know anytime that I'm looking down here beside me. That means that, of course, I'm looking at my screen on YouTube so that I can see the live chat as it's happening. So while you're doing that and while you're putting into the chat where you're tuning in from, I would just want to briefly tell you why we set up the ESG and Tech Show. Well, in essence, in my opinion, ESG and tech are the two main themes that are underpinning this next decade. ESG is, of course, environmental, social, and governance, and tech is technology. And ESG relates to a series of metrics that investors use in order to make decisions about whether the companies they're looking at and analyzing are meeting expectations around sustainability, perhaps climate change, perhaps social development, perhaps how a government, or sorry, not how a government, how a company is governed. And as a result, this is something that really is giving investors today more of a framework than ever to be able to do that. Then, of course, technology, and particularly we're going to focus on technology today. Technology, then, what we have looked at over the past while in this show has been blockchain. We've looked at 3D printing, we've looked at the future of public transport. We have looked at a range of different technologies that really are changing way we interact, the way we socialize with others, and all of those things along the way. So today, like I mentioned, we're going to have a particular focus on cloud collaboration. And we're going to particularly look at a couple of companies. Today, I'm particularly interested to look at Salesforce. I'm going to talk about Salesforce because it is a company that as a business has been doing really, really, really well. But also there is a lot to look at then from the point of view of the stock, because the stock has not been. And when VectorVest could identify this pretty early on, I want to reflect back to you how it was doing. Okay, so I'm going to take a look over here into my chat here, and I'm going to check and see where you're tuning in from. So Mark is joining us from Brooklyn, New York City. Well, Mark, you are very, very welcome indeed. And I love the way you put in VV in there beforehand. So yes, you're very welcome back to see us. And also, like I say, I see lots of new people have just joined us. So please do pop it there into the chat. Let us know where you're tuning in from. We always have people who come from various different parts of the States. We often have people who are joining us from London and from Berlin and from Belgium and different parts of Europe. Had people from New Zealand and Australia and the Middle East. We have people who've joined us from Canada, etc. So please do pop this in. A place that I haven't mentioned so far. So Xin Yuang is joining us from Hong Kong. William is joining us from Chicago. Hello, William, just there in Chicago a couple of weeks ago. Dee is joining us from Missouri. Very welcome indeed, Dee. And please do, I see lots more people have just joined us now again. So please do keep them coming. And I'm going to say, Nashville, Tennessee. Sam, you're super welcome. I I can see here we also have Lulu is joining us from California, Chihuahua. Then I can see, I think it is Aremia is joining us from Samoa. Marty says hello. Hello, Marty. Jordan is joining us from Los Angeles. Mike is joining us from Edmonton, Alberta. Uh, Jordan says, joining us particularly from Santa Monica. Been there, Jordan. A lovely part of the world. Joe says hello from Slovenia. Oh, you're very welcome, Joe. I don't think we've had somebody from Slovenia join us before. That's brilliant. Marty is joining us from Dallas in Texas. Been to other parts of Texas, not to Dallas though. So great to have you here. Sophia is joining us from Austin, Texas. Let me see. Ernesto is joining us from Mexico. You are very welcome as well to join us from there. And I can see there's lots more, lots more people who are joining us now. So please do pop it into the chat where you're joining. Steve says, yo, what should I buy right now? Okay, well, let's have a chat about that. RT is joining us from San Francisco. And then Jordan is saying he's waiting for the FOMO meeting. The FOMC meeting. Okay, right. I thought you meant FOMO because you're in Santa Monica. Okay, the FOMC meeting, of course, is a very, very different conversation indeed. Brilliant. Well, if you haven't already commented, please do let us know. As you can see here, we've got a range of people joining us from all over, and it's always wonderful to see that. Okay, so right. I think it's going to be important today to start off by looking at the current market. Okay, let's just take a look at the market before we get into the actual conversation around cloud collaboration itself. Let's just pop on over here and let's take a look at the market, because I think that is going to be an important thing for us to do first and foremost. And remember, when it comes to deciding what you're going to buy or when you're going to buy, market timing has got a lot of the answers there for you. Okay, so I'm going to switch across my scene and just take care of that right now. So here we go. This here, right. So what we can see here, this is the market timing graph, and I've got this one for the US. I could, of course, have gotten this for any part of the world, but I'm going to focus on the US for you here. So obviously, as you can see, the trend so far this year has been very much to the downside. It's rare that you see it, but the highest point of the year in terms of the market was the very first trading day. It's been pretty much downward moving from there. So we can see that up here at the top of the graph. So what do we do now? TH Uriel says, what should I buy right now? So let's just take a look at overall what's going on in the market right now. If I scroll in here into the last 3 months, the highest point of the last 3 months was in the 16th of August. So as you can see, we've seen a decline, then a pop up, decline again, pop up, and then we're into a decline. Now today, just to explain this to you, today we are seeing what's called a doji, right? This is a doji right here. So now I've scrolled right in now to I've scrolled right into a minute by minute graph. This is an intraday graph up here. You can see this up here. It's an intraday graph, and this is broken down minute by minute to what's happened. Now, what a doji is when basically the market doesn't really move up or move down. So what you can see has happened here is that we can see this down and then we can see this up. But like I say, these are minute by minute changes. When I scroll out here, let me look back on this over, let's say, a 5-day graph. Okay, so this is 5 days, and if I go back out to a month graph, you will see that today, in essence, very little has happened. Now, what this doji here is telling us is that the buyers and the sellers can't decide who's winning today. Now, the price did start off down here at the high. The open price was 53.70, and remember, this is the VectorVest composite. The VectorVest composite is a combination of all of the stocks that are in the US database. So when I say the price, I'm not talking about an actual price. I'm not talking about the price of an ETF. I'm talking about VectorVest composite, the VVC, the VectorVest composite of all of the stocks that are right in here right now in the market. So you can see here we've got a doji today, DOJI, and a doji is when the market can't really decide whether it's an up or a down day. So what I can see here is that my open price was 53.70, and so far the live price is 53.74. So we're literally 4 cents off. Now the market did go up, right? It did actually go up. The buyers did push the price up, but as you can see here, right? So that's what you can see here by the top of the very top here. So the high price so far today was 53.90. And that is just showing us that the buyers did push the price up as far as that, and then the sellers pushed it back down again. So today is a day when we would say so far, and I mean today is only market has only been open now 2 hours and 40 minutes. So it hasn't been, in fact, sorry, I'm wrong. Yeah, so 1 hour, sorry, and 41 minutes. So therefore it hasn't had an awful lot of time to make up its mind today. But if you look at yesterday, different story. The market opened at a higher price than it closed. So the market opened at 54.10 and it closed at 53.44. So you can see here. So I know that the share price closed lower. One, because it's red, but also is because we can see here is that this candlestick here is full. That means that the price started. It opened at a higher price than it closed. So we can see here that it actually came down. And I remember one time when I did an introduction to technical analysis course, like way back. And what we learned there is that imagine that you pull down a curtain. If you can imagine that you pull down a blind, that if you pull it down, that is the way in which to remind yourself whether it was an up day or a down day. So you can see here in this case it was a down day because it's red, but also then it pulled the curtain is closed, so it fell in price. You can see the same here, and you can see the same here, and you can see here. Here's another doji, and this doji happened here last on the 14th of August. You can see this here, and in this case you can see again the buyers and sellers couldn't make up their mind. So you can see the buyers pushed the price up as far as here, and the sellers pushed it down as far as here. But it opened and closed pretty much at the price. So that's what's happening on an intraday, like minute by minute basis. That's just to give you an understanding of the language and the terminology of technical analysis. But if we just get an understanding now of market timing broadly, okay. So let me just get this for you. I'm going to pull up a 6-month graph here, and like I say, over that time we can see that the market has been falling. Then it went through a rising period here, has been falling again. So what would we do here depending on the type of investor that we are at? Let me just see now. I'm just going to check in here on the chat. Maria, oh wonderful. That you're back. Hello, Maria. Maria says hi from Maine. Been a while. Nice to see you, Susan. You are most welcome back, Maria. Thank you. Then Natasha, I think Natasha, you might be joining us from Washington, and you said that's exactly what I want to know is what you buy right now. Okay. Well, the question is, should you buy right now, right? So remember that the trend is your friend. So if you are a longer term investor, and then I'll also look at if you are a short term investor, let's look at both of those scenarios. So if you are a longer term investor, the answer to this question is that we are in, number one, we're in a confirmed down call. Let me show you that. So since back here, the confirmed down was issued on the 26th of August. And on the 26th of August, confirmed down is the most cautious and conservative market timing indicator and was given a bearish signal. And as you can see, had you heeded that, that would have been a good idea. The market that day opened at 58.17. And as you can see, it's closed down here now at 53.78. Again, reminding you that this is, remember again, this is the VectorVest composite. So when I say price, I'm not referring to an ETF, I'm referring to the VectorVest. So the answer is, if you're a long-term investor and you're looking to buy, well then, now is not the time to be doing that. And similarly, the MTI is in agreement. The MTI is the market timing indicator, and it is in agreement. A couple of days later, it gave its own downward signal. The MTI crossed over 1 on the 29th of August, and it crossed over 1 down to 0.99. Similarly, on that day, price was 56.15, and today it's down to 53.78. Okay, so longer term investor, the answer is now is not a good time. Now, that said, what is a good thing to do at this stage is to understand when to buy. Now, I think Maria here has an interesting phrase in that she says, "Be still and let market come, and be still and let the market come to you." That's an interesting phrase, all right, Maria. That's a good one for us to bear in mind. And Natasha says, "Yes, you're long term." Okay, Natasha. So what I would do, if in from a long term point of view, what I am doing actually, from a long term point of view is be looking for when these are going to turn around. And right now, the MTI has fallen further. Okay, so it's fallen to 0.64. So from here, this is the time, this is the place to watch now. If I'm just going to scroll right in here, I don't see the MTI showing any sign of turning up. But what I do see is a sign of is that the MTI, again, when I say MTI, I mean market timing indicator. The market timing indicator in VectorVest is very simple to follow. Above one is favorable, below one is unfavorable. Okay. Above one is favorable, below one is unfavorable. So below one, we're out. One, that is what that mark is here. And went below one on back here on what did I say, 20, 13th of August. It went below one on that day. But as you can see here, what I'm noticing is that the slope of this is not as steep. You can see here is that like to go from 1.03 to zero 0.9, like down to 0.71, it's getting a lot. It's getting a lot less steep instead. So that is just showing you from that point of view then that it's that the decline is getting gentler. That's not to say that the MTI is turning around yet. We need to see evidence of the MTI turning around. Now, that is if I was a longer term investor, I would be looking for the confirm call to go up. And as you can see, it's down. And I would also be looking for the MTI to turn up. What if I'm not though? What if instead I am more of a shorter term investor and I'm looking for a different type of opportunity? Well, let's take a look over here now and see what Thomas says. What about to buy GDX? Yeah, let's take a look at Thomas. Louis Luke says, Maria, got that right. There's no rush to buy, but taking profit never fails. Maria says, thank you, Susan. Okay, Thomas, let's take a look at your 2 points as well there to get into the stock side of things. Okay, now, so from here, let's now not consider this from the point of view of a long-term investor, but a short-term investor. Right. I'm now going to close my graph here, and I'm going to go back over here to the color guard. Okay. And let's read the market to see what is going on here. Here. Okay. Now, what I can see here is I can't do much more to make this bigger here, but I just want to just look at the colors. That's all we need to do. Right. In at the very beginning of the month here, you see all these yellow lights. The very beginning of the month. What we were seeing here was not the very beginning of the month, the moving into the second week. A lot of yellow. A lot of yellow. Now, a lot of yellow is showing us here that we have a uncertainty. We've a lot of uncertainty. A yellow light in the color guard looks at whether the market's trend is weakening or if it is reversing. Now, if it had been reversing, the market would have, of course, turned up. Now, you never know with a yellow light whether it is weakening or reversing. In our case, it was weakening. The trend was weakening, then it picked up again to the downside. Then, as you can see now here, we're seeing a little bit of both. We're seeing, and that's what I'm saying, is that we can see that trend, the slope of that market timing indicator is getting more gentle. Because it's getting more gentle, that is showing us again that the market is now trying to decide, is this a turning around trend or is it continuing to go down? So right now is a really uncertain time. It's a really uncertain time. Right now, I wouldn't be doing anything as a short-term investor. It's from a market timing point of view. Stock selection might be different, but from an overall market timing point of view, the market is uncertain. It's not showing any. It's not really showing any direction here at all. And if you then wanted to understand or to get further insight into that, or just to understand, like, how do we know what to do? Here you go. It says here, aggressive investors and traders should play the market with a bias to the downside, is what it said yesterday. And the reason it was saying that yesterday was because we had 3 red lights. But the thing about that is that Dr. D always says, let the first hour of trading happen so that we can see where the market is going, right? So this morning you might have said, right, based on yesterday, we had 3 red lights. And from there, I'm now going to make a decision to play to the downside if I was an aggressive investor or trader. Now, this is not for the long-term investors. Now, I am going to answer all of the questions that are coming in. Natasha, thank you for your point. I'm going to answer that in a moment. So the thing is, though, is that in the first hour of trading this morning has indeed passed. And in the first hour of trading, we can see that actually the market is flat. We can see that because when I go to the market timing graph, we can see that the market is flat. In fact, when I say flat, I'm back to my point that we're here in a doji. You can see the market is actually up today. So if you were playing with the market or making a play to the downside, is that, and again, please, again, I want to remind you, I'm speaking about the overall market, is that this wouldn't have been rewarding today. If you were simply pursuing, let's say, the NASDAQ or the S&P 500, based on what I'm seeing here from the VectorVest composite, you would not have been rewarded today. And that is why Dr. D always says, let the first of trading pass. So whatever needs to, just remember, when the market closes, right? So it closes at, from my point of view, it closes at 9 p.m. Irish time. That's 5 p.m., 4 p.m., sorry, Eastern time. And if it closes at 4 p.m. Eastern time, that's a long way until it opens the next morning at 9:30 a.m. again. So anything that happens in Asia, anything that's happened overnight, anything that's happened in Europe in the morning, all of that has to be factored in. And of course, people can place orders in between market times. So I can tonight, I could log on here to my system at 11 p.m. and I can put in a market order for to buy 100 Coca-Cola shares. And it will sit in my stockbroking account until the market opens, and then boom, it will hit the market. So that's how news is factored in. Is you can have orders that are sitting there waiting to be implemented, as well as, of course, the reaction to them. That's why Dr. D always says at the first hour of trading. And based on the first hour of trading, I can see, first of all, here I can see that the market is a little bit up today. Like I say, it's in a doji. But in particular, I can see here that we have got 3 yellow lights. We've got three yellow lights. Okay, so let's pop back over here. Natasha says, should we sell then to get back in a later date so we don't lose too much? So Natasha, the market timing and confirmed call indicators from a long-term point of view, they are the most conservative indicators that you're going to get in the VectorVest. So that there is no other, sell date that or sell signal that is given from from a bearish point of view. It's like uh, the equivalent of a sell signal in the stock is that this is the most conservative indicator that is actually put out there from the point of view of market timing. So just so that you're aware of that. Maria says long-term investors should consider learning options to protect and preserve your retirement capital. Yes, indeed, Maria. Of course, as you know, I'm somebody that looks and uses options quite a lot. I have to tell you that this year has not been a year that I have been using, or doing my usual. Usually, what I sell, or usually what I do is that I sell puts. But if I sell puts, I would have to be bullish, and of course, this year has not been the year for that. So, from that point of view, that can make a difference. Now, for some reason, I see Roy is calling me, so I'm just going to check in with him here. Hi, Joey, you're live here on YouTube. Is everything okay? Yep, I think we're all good here. I'm just going to check in with you there, Joey, but yep, certainly we're live here, and you're now partly on as part of our episode. Okay, perfect, Joey. Yeah, you can check in with me again if there's any issues. Okay, thank you. Okay, so as always, Joey is always brilliant there to make sure that I'm all good and taken care of. Right, so now what I'm going to do there is move. Maria then says sell bear calls, and Maria says in a bear market as well. Yeah, okay. Now that, yes, of course you can do that. There's certainly an opportunity to be able to do that. you can do that, but you have to be able to handle that market timing position also. So indeed, Maria, and of course, as I'm sure lots of you, we also have a retirement. We have lots of opportunities about, as Maria says, how to take care of capital, etc. Okay, now what I'm going to do here is I'm now going to move on then, and let's go to the next part of the show, where we're going to talk about cloud collaboration itself. Okay. Now, I'm going to actually move back to my scene here. Okay. So back here, I'm going to, okay, Maria says, hopefully that should write itself now. Natasha says sound cutting in and out. So just checking there that we're back on track. I think we should be okay there now. Hopefully we will. Okay, so moving on then from there, I'm now going to take you through from a cloud collaboration point of view. I'm now going to take you through blitzscaling, through a piece of a book that I read all to do with blitzscaling. And this is how companies have a really can do create business model innovation in their businesses, so that then we can see things like Google outstripping traditional that have been around for a long time, or the social media companies that are outstripping again for a very long time. So, and I just thought that I thought that I might bring this to you because it was actually written by Reid Hoffman, and he's the co-founder of LinkedIn, and Chris Ye, who is the co-author of the bestseller The Alliance. Now, I read that as well, and it's a book that I found actually was quite interesting in the way it put forward how to manage staff in a different type of world. But what I want to do is that I want to refer to you some of the key things that came up in this book. Um, when they talk about the four factors of designing growth, or designing a business that is massive, that can have a really massive reach, it says here the four factors. Number one is market size. And when you think about cloud collaboration, when you think about all of the people who need to work simultaneously on a project, you're can first of all you can talk about the entire workforce, right? So the entire workforce obviously factors in a lot of different people. But secondly, I would say that you're also thinking about people who are working in education. So we also have the entire student body. Okay, so we've got the entire student body, we've got the entire workforce, and then there is, like, whether it's charities or other people who simply want to work together. Think of anybody. Think of anybody who wants to work on a Word document. Think of anybody who wants to work on an Excel spreadsheet and send it over to someone. Think of anybody who put something into a database so that somebody else then can see it. You think of any of those, that is the size of the cloud collaboration industry. The second thing that is in this book then that says that leads to is distribution. You need to know how to distribute. And the example that was given in the book as well, just about what Airbnb did to do this really well, is it levered, which is very smart. It actually levered Craigslist. So when somebody created a profile for their property on Airbnb, then what they did was they shared it on Craigslist, and this massively helped the distribution. And what they did to be very savvy about this was not create any manual work at all. They put one button, just one button onto your Airbnb listing, which said, "Do you want to list this on Craigslist also?" And then automatically it massively increased the distribution of that listing. Similarly, PayPal and eBay had a similar idea, and that is when somebody wanted to sell something on eBay, they then gave them the option to put a button onto that eBay profile which said, "Do you want to pay with PayPal?" And as a result of that, then both of those companies, Airbnb and PayPal, were able to lever the much bigger distribution on another side. Um, going to pop back over here now. It seems that we're all back on track, so really glad to hear that. Apologies there for whatever was going on with the sound, but I hope we're okay now. So Maria says, do you think tech stocks are ready for the picking, or as long as rates increase, tech will see more pain? Maria, I'm going to get to as soon as I get back to the system after I explain the the way that the business model innovations happened. I'll come right back to you on that. Okay. So that was the second factor, was distribution, and then the third factor is coming up here. The third factor is high gross margins. And they talk about the difference here between Amazon, for example, and something like Facebook. Amazon believes in low margins. Jeff Bezos has a saying, which is that your margin is my opportunity. They believe in having very, very small, massive, massive, massive growth and scale, massive market share. And whereas on the other hand, we have a company like Facebook that has been having very, very high margins, very high margins. And of course, it's a profit generating, machine. So in this book as well, in Blitzscaling, they talk about having very low incremental cost. So if we have a second customer, then there is a little, like relatively little incremental cost in having that second customer. So that then if you're growing massively, if you're growing 10% a day, which of course you can't do for very long, because then you'll just, have to be able to keep up with that growth. It's massive. But by having high gross margin, well, then you can afford to build in, very high customer service, making sure you have enough people to support that growth, etc. And then the fourth one is network effects. And it's interesting to see how this is happening, because the network effect means that the more users there are, the better the service gets for every existing user. So, for example, um, I see that. I see Louis Luke there. Have energy. We're doing okay. We're doing okay. But thanks, Louis. So what I just want to mention here is that when it comes to the network effect, this is where if you're in the network and I'm in the network, we both make the network better. So by if you think about what Dropbox did, Dropbox said you, Susan, can create an account and you can put things into Dropbox, but somebody else who wants to access Dropbox will then have to be able to to be able to see what's in that account. Revolut, for example. Revolut has been a really big fintech firm that we've seen grow, and that with Revolut, what I can do is I can transfer A to B, I can transfer money across. But on the other hand, somebody has to be able to receive that on the other side if somebody else is going to be able to receive that money. So that is also a networking effect, or the network, well, that happens. So from that point of view, that's what the network effect is the more people that are in the network, the better, because then more people can use the service. So of course, the more people that are using Airbnb and the more people that are providing Airbnb rooms, the experiences, well, then the richer the experience becomes for everybody. But then these companies have to incentivize the network effect to happen. So all those four things, let's just bear that in mind. So we're talking about market size, distribution. That's number two. Number three is high gross margin. And then number four is the network effect. And how is that applied to cloud collaboration? Well, think about this. Think about some of the biggest companies in the world who enable cloud collaboration. One of them might be a database company, right? So the company that I'm going to talk to you about today is Salesforce, because Salesforce has done a phenomenal job of growing business, but yet the stock has really fallen, really, really fallen. And so, Maria, when you ask the question, do you think tech stocks are ready for the picking? That's one that we need to consider. That's one then that you might question. Well, it is a business that is growing steadily. There's certainly that for absolutely sure. But on the other hand, is it a stock that's worth investing in? And that's the type of thing that I would like to discuss with you today. The second thing, though, is that the other company I'm going to look at today is Box. And that's because another big aspect of cloud collaboration is that when it comes to the ability for companies to collaborate, of course, then what also matters is that other people are involved in the system, just like I told you in the network effect. So for all of those reasons, then you need to make sure that other people are involved as well along the way. And what has been happening with Box's stock, that's also what we're going to look at. And then, of course, the other one, and I'm not going to mention this stock, but just to speak briefly about it. Do you remember years and years ago, years and years ago, do you remember Microsoft? When Microsoft Works came out, or the Microsoft 95 came out, Microsoft Windows 95 spreadsheet, and then you you could email people across. You could you could email people a spreadsheet, and then somebody after that, then they could edit it, and then they could send it back to you. Like today, now Microsoft 365 enables real life collaboration, enable all sorts of security to see who can collaborate when. And of course, then the big rival there was Google Sheets, because Google Sheets then enabled me to be able to connect with anybody else as long as I had a Gmail. And I could enable that is if I wanted to have security on it, etc. So what it has done is that has really changed those business models. So as a result, that's why I felt it's really important to mention that the four key things that we need for a company that can grow immensely is market size, which is huge, distribution, which we can now see, and cloud collaboration is itself its own distribution. Number three is high gross margin, and then number four, of course, is the network effect, which the network effect is happening because again, that is what cloud collaboration is. All that said, all of that has happened so far. So A, what's the future for these businesses? And B, are they investable? That's where we're going to go. Okay, before I do that, Tash says, do I have to pay taxes if I sell and hold cash until I reinvest? I'm new to all this, but I inherited stocks and bought a couple, but I was told to never sell. But who knew 2 years later this would happen? Okay. Now, Natasha, what I would say there is it depends on the tax in your own country. Now, traditionally, let's say if you're in Ireland, yes, you would have to pay taxes. For example, in my case, in Ireland, if I bought a stock or was given a stock, inherited like you mentioned, and I sold it, the gain that would have happened in between the two is called a capital gain. And in Ireland, I would have to pay 33% tax on that. And that is independent of if I was to sell and buy tomorrow or sell and buy next year. But it all does depend on the taxes within your own country. Okay, so as we now move on, as I say, I'm going to now go in and look at the investing side of this. I am going to answer two questions. One is what's next for these businesses? And also the second thing is what do we look for when it comes to the. Also, what I want to do is get back question that Thomas asked as well here as what about buying in NEM? Okay, so what I'm going to do now first is I'm going to bring you to Salesforce's recent earnings presentation. Okay, let's go there now first. So how I'm going to get there is investor relations, and I'm going to share my screen with you right now. Okay, so here we are. We're over here now on Salesforce's investor relations. Okay, and you can see here, this is the products that it has. So it's now no longer just about selling faster and smarter with the world's #1 sales platform and service and marketing. But in particular, look at where it's gone to. It's now talking about commerce, how you can connect in commerce in with cloud collaboration, engaging with customers in real time, enabling people to build their own apps on the #1 enterprise cloud platform, analytics, and also, as you can see down here, the one that I wanted to bring you towards, which is collaboration. Deeply integrate real-time chat and Salesforce data into documents, spreadsheets, and slides. And this is the point I'm trying to make, that collaboration is no longer how do we collaborate on a document. How do we collaborate, for example, between the management system and those documents, spreadsheets, and slides. Another one that I want to bring up to you then is Box. Okay, so I'm going to bring you Box, Investor Relations. Go. And as you can see here, Box is, I'm going to bring up the press release here to you. So Box is it's a cloud collaboration platform. Share documents across. Now, what I'm going to do is show you its earnings. So I'm going to show you the earnings presentation here from Salesforce. So this was from Q2 full year 23 quarterly investor deck. Okay, and let me scroll on down here. Now, this looks really good, right? I'm going to show you here. This looks really good. But what I am going to show you also is what the stock looks like at the same time. So Salesforce, #1 provider by revenue by 9 consecutive years, consistently delivered durable revenue growth, nearly doubling from full year 2019 to full year 2022. That looks pretty good, really, doesn't it? Fastest growing top 5 enterprise company software with 26.5 billion in revenue. So again, that's really, really significant. And look, I can keep on going here. I really can. I can keep on going here and I can show you some really great numbers. Um, but what I now want to show you is its stock price. All right, so let me just show you this here. I'm going to go onto a graph, put in CRM and look what happens. Here it is. Look at that share price. So the share price has actually gone from 250 to $7 a share last year, all the way down to $151 a share. And as you can see, over the past year, it has had a sell recommendation for much of it. It's either had a sell or else it's had a hold, one or the other. So, like the thing is here, you can see that it's been in a real decline. Its first sell recommendation was given last 1st of December 2021. And we can see then that has been the case as well in $148. It had a sell recommendation the 4th of January. It had a sell recommendation 17th of May. And it is currently in sell recommendation. Now, so despite the fact that the company has grown with such revenue and is really at the forefront of cloud collaboration and is enabling companies to build their own apps and is integrating and competing with the like of Google Sheets and Microsoft 365 and has so many integrations with everybody else and its earnings is rising, what is the problem? And this is where, Maria, to come back to your question about are tech stocks ripe for the taking, what we need to consider here is two reasons the stock will rise. If the earnings will rising is if the price of those earnings are rising. Now we can see here that the earnings per share has indeed been rising from $4 a share to 89. Now the question is, Maria, then, if the share price is falling, what is happening to the price of those earnings? So what I'm going to do is I'm going to pull up the PE ratio for you here. You can see it right down here at the bottom. Now, let me, the last 3.5 years, right? So let's just see what's after happening here. What we're seeing is that Salesforce back here was $151 a share, 22nd of April 2019. Now, let me just remind you that it has doubled its revenue in that period of time. So what I'm showing you, the graph I've just shown you, the Salesforce has actually doubled its revenue in that period of time. It has doubled its revenue from 26.5 billion in the time frame that I have shown you. Despite that, the stock hasn't moved. Stock has not moved. Now, down here then, we can also see, remember what I told you, the third characteristic of a blitzscaling company is to have a high gross margin. And it is a non-GAAP, that's an accounting measure, operating margin guidance of 20.4%. So it does it have a high margin? No, but it certainly is a double digit, solid operating margin guidance. And yet, the reality is here is that it has not, the share price has not moved. If you bought back then, held it to. And that is, as you can see, if you had bought back then, because it was a buy recommendation on Friday, the 22nd of February 2019, and if I go all the way up here, up to a high price, I went up to 311. So it did double in that period of time. The share price doubled in that period of time. What we're looking at now is a massive decline, a massive decline since that has happened. So, question is, Maria's question is one, is it now right for the picking? But the other question is, what has happened in the meantime? Well, what has happened in the meantime is that the PE ratio back in 2019 was at 64 times. 64 times. Now, thing is that a PE ratio of 64 times earnings is quite significant. It is quite significant. So investors had really high expectations back then. And those expectations were borne out. I mean, we can see that the earnings did rise. You can see that the earnings did rise here. And when they started to rise, you can see then we saw investor expectations went up as well because the share price rose. So people wanted part of the action. And then we saw quite a significant fall here. Does anybody need me to remind you what that was? That was COVID. Then we had a massive rise. And of course, what happened then was that we saw, oh, okay, here it is 2020. There's now going to be a much bigger focus, dramatically much bigger focus now on online. So therefore, there was a much deeper investment into moving online, moving things into the cloud, cybersecurity, real time, all that sort of thing. People work from home. And now we saw here the PE ratio at the time went up as far as 89. And this is the challenge. Is when it goes up as high as that, sales force would have had to do massive, like deliver massive growth in order to really outperform those expectations. And from then on, the P ratio began to fall. So you can see here, down from here, as the PE ratio has then continued to fall, it was at 70 times at its peak, at the share price peak. The PE ratio, even at the peak, had at that stage begun to fall. This is the difficult thing about a lot of the tech stocks, is that the tech stocks had such massive expectations built into them, is that even if you double your revenue, like if you double your revenue in 3 years, then what happens? Well, okay, fair enough, you've delivered on expectations, but you haven't. So this is ultimately what's happening now is we're seeing a massive fall off here, seeing a really big, very, very significant decline. So the first, like I say, first sell recommendation was in 1st of December. A sell recommendation was issued. Now, had you taken heed of that, you would have been selling it $200 a share. If you went on and you sold at the next sell recommendation, selling it $209 a share, and all of that still would have been significantly higher than today. So now that it's fallen, now that we see the PE ratio is down to 30 times earnings, and we can see those earnings are rising, and we can see continued demand for their services, and we can see continued utility for what it does, is it now a good time to buy? Well, the answer to that question lies in the RT. So now what I'm going to do is I'm going to scroll right in to the last month, and here is the graph that I would look at. I would be looking here at the red one. Now, what the red graph is telling me here, so this is the RT, relative timing. Now, relative timing is number one, a stock's dynamics, direction, and missing one, dynamics, direction, and magnitude. That's what it is. So it's a stock's direction. So is it going up or down? The magnitude of that, is it going up massively or falling massively? And its dynamics, is it doing so in a really volatile way? Now, right now, and by the way, again, just like the market timing indicator, this is very simple to read. Above one is favorable, below one is unfavorable. Above one is favorable, below one is unfavorable. Above one is favorable, below one is unfavorable. The reason I repeat that 3 times is it's that simple, but it's also worthwhile remembering that when you're trying to interpret this and turn it into action, is that it's very simple to read. And right now is 0.65. So my answer is I wouldn't be buying Salesforce today. And even if there was some doubt in my mind, which there isn't, it is currently at a sell recommendation. So since it has a sell recommendation, I wouldn't be buying it at the moment. Would I consider it for the future? Yes, would, because the earnings are rising. At the end of the day, the earnings are rising. So yes, I would consider it for the future. Even over the past 3 months, the earnings has been rising. Of course, I might consider it for the future. But at the moment, the signals are there to say that sellers are pushing this down. Now, similar to the market, it's going through a doji today. It's neither going up nor is it going down. But and what I would watch out for is when I would see that sell recommendation give way to a holder, of course, buy, but particularly the RT. I would be looking at the RT, looking at the relative timing. Often it's favorable, unfavorable. And when you see the RT rising, remember a stock only rises in price for 2 reasons: because earnings are going up, or the price of those earnings are going up. Right now, investors are negative, are bearish. They are not happy with tech stocks. They're not happy with Salesforce, despite we can see the dramatic growth. They're not. So how you can read the room is through RT, is looking at when RT goes above, then I would be going back to reconsider that stock. And as another word of caution, remember I would be combining my market timing situation with my stock selection decision as well. Market timing, I would like to see that on the upside, and then also looking at my the stocks that I would be picking, that they would also be something that is looking to the upside as well by looking at making sure RT is. Now, I want to go back to Thomas's question, and then I'm going to come back to box because I want to show you box as well. Let me now go on to a new graph here, and I'm going to look at Thomas's question. GDX talks about Panic gold. Okay. Right. Now you see it's much harder to make a decision on this one because I don't have my fundamentals. So my earnings per share and my PE ratio now don't make any sense at all. Okay. So if I'm going to be buying something like gold, well then of course I'm going to have to not rely at all instead. I'm not going to have to rely at all on my market, sorry, on my fundamentals. Instead I have to look at. And what I would say here is that this has gone through a dramatic fall, similar enough. The 18th of April, it was at $40 a share. We're now down to 23.70. I mean, ordinarily, gold and inflation can be a good combination. In fact, commodities in general can be a good inflation hedge. But just remember two things here is that you are looking at this is future. So therefore all of the volatility that is in the commodity price is going to be baked into the pie. So you're not just buying gold or gaining exposure to gold here. Remember, it's the futures that you're actually analyzing. Now, me again, in my case personally, this is not something that I would be considering at the moment, and the reason for that is that the RT is below 1. I can see the not alone is the RT below 1, it is falling. Right? If I look right here, yeah, you see here since which is for Monday. On Monday, the RT was at 0.8. Yesterday was at 0.78, and today it's at 0.78. So I can see here that it's falling since a higher point after picking up a little. So remember today the market is up slightly in a doji situation. I can see here that this is down. So personally speaking, I would again be watching the RT and helping me make a decision about that. Okay, what was the other one you had then for me over here? Thomas NEM. Okay. Okay, so similarly again in this case, you've got a sell recommendation and you've got an RT below 1 and you've got an RT that's falling. So I would have a similar answer there. Just remember when it comes to understanding stocks and picking stocks, if you are first of all look at market timing. That's why I start off the episode by an analysis of market. Second thing I would do is consider and really give it some consideration. Consider the impact of um, where the buy recommendation is, and if it's a sell. Remember, VectorVest doesn't give anything stronger than a sell. A sell happens when the price has fallen below its stop price, and this stock's stop price is the 313. It's at 42.41. So it's got a sell recommendation, and it has had a sell recommendation, well, uninterrupted sell recommendation since the 23rd of June. And the first sell recommendation this year was back on the 12th of May. So taking all of that into consideration, that's an important bear to bear in mind. Okay, Eric says, what do you think of EVTL stocks? What do I think of EVTL stocks? Um, okay, this is a very new company, clearly, and the reason I'm saying that is back to this looks like looks like did it list on the 17th of August, or else we just have data from the 17th of August. Um, and as a result, we haven't got an awful lot to go on here. It has fallen since then. It had got a sell recommendation for a lot of time, and its RT is below 1. Now, I can see here that the price seemed to hit its low on the 7th of August. And if I was to, since then, it seems that investors have been pretty bullish, which is the reason that it's got its hold. Let me take a look at its earnings. Yeah. Well, the earnings are rising. It seems that the PE ratio is also. Oh, okay. Hang on a second. Hang on a second. The company is making a loss. That's what's going on here. So the earnings are rising. Well, actually, what it means is that the losses are lessening. So, okay, here's my take on loss-making stocks. One of two things has to happen for a loss-making stock to make a profit. Either it starts selling its products at a products or services, and I see here, I think it's defense. It starts selling its products or services at a operating profit, or else it gets taken over by a company who can make that business work. Like when you look at WhatsApp was bought for a fortune, but then and it was like far, it wasn't even, it was nowhere near profitable. It was barely generating any revenue. But Facebook were able to plug that into its own business model and then make a big difference to it. Right. Let me just see there now. Jordan is telling us what he just bought, okay, and what it's cost. Interesting. Perfume Aromas is, what do I think about Microsoft? What do I think about Microsoft? Personally, as I'm very interested in Microsoft as a company, and I've spoken about Microsoft a number of times in the show. And the reason that I talk about it on the show is because it is one of the leaders when it comes to the metaverse, when it comes to, again, cloud collaboration, but this time communications tech. It is a company that knows how to make money. It is a company that's profitable. It's a company that has global distribution. Look, I could tell you a lot about Microsoft as a business. That's not the purpose of this show, though. The purpose of this show is to look at it from an investment point. So again, we're seeing here earnings per share. Okay, earnings per share is rising, and if we went back 50 years, okay, maybe not 50, but you get my point. Like Microsoft has been extremely good at making money. And even though, as you can see here, it's been falling, and it has fallen. I mean, high price was $343 a share, now down to 244. It's one that I think is a very interesting. It's a very interesting company. I look personally, I wouldn't be buying it right now, and the reason for that is that I don't see the RT above one. I know I keep saying it again and again and again, but I don't buy stocks when the sellers are pushing them down. I don't try to catch a falling knife. I never have. That sometimes has to push you into being a more patient investor. I can say that I am the most patient investor naturally, but the RT has really taught me. Like, okay, you know what? Let's conduct an experiment. Let me take everything off the graph, okay? And let me just look at RT. Let me just look. Um, okay, let's look at it the past year. RT, if I was following RT, okay, I would, let's say at this point, um, now bear in mind, if I have the stock, I may not be following it in and out all the time, but I just want to talk about it in terms of using RT from a buying point of view. That's what a lot of you have been asking me about. So here in the case of RT is below one. In this case, 22nd of August. And at that stage, the price is at $277. It fell to 244. Okay. Now, RT was above one back here. Price price was at $276. And it went up to $206 when the RT was above. Okay, let's go back over here. The RT at this stage when it crossed over one was just under $310. And then it kept me out of the stock until buying it back here at $288. Like, I can keep going here if you want me to, but RT is a particularly good measure of understanding the stock's magnitude, direction, and dynamics. So when it comes to me making a buying decision, I just don't buy when the RT is below one, unless I have a very, very specific reason to do it. And that only reason is if I'm bottom fishing. And bottom fishing is something that I was doing in April 2020. That is when you're dealing with stocks that are very, very, very low base, where you're looking at the time when the RT is springing up really, really quickly. But but that's a different sort of scenario. When it comes at the moment, we're seeing bearish sentiment across the market, bearish sentiment across tech stocks. That's being reflected in the PE ratio. So when I put all of that together, I only want I only buy when I feel that that's going to come around. I am not an investor who buys stocks and then hopes other investors will change their mind. I don't need to do that. I don't need to go through the pain of losing money. I'm not saying I avoid losing money all the time, but I don't go through the pain of doing that when I can just let RT tell me when, generally speaking, the buyers are starting to push up through the sellers, I would say. Okay, so um Perfume Aroma says the MTI is at 0.64. Have we got the bottom? Okay, so Aroma, we spoke about that at the beginning of the show. I have seen the MTI go a lot lower than that. A lot lower than that. I'm not calling a bottom, and I don't need to call a bottom. I always say you don't have to predict the future, just analyze the present. the present right now, when it comes to the MTI, I go back over here to viewer, I go back over here to this. There's no reason that's like there's the only thing I did say is that the slope is getting gentler, and but that's not to say that it's turning around. I would want to see it actually turn around. I don't see any reason why we might be seeing that yet. And Maria then suggests maybe after the Powell meeting, perhaps. Okay, so what I'm going to do now is I'm now going to finish off where I promised I would, which is that I said I would go back over here and look at Box. And I want to look at Box because this is a different sort of a company, and look at it, it's very different sort of graph to Salesforce. So I'm just going to show you over here when it comes to Box, revenue growth of 15% year over year, operating profitability on a GAAP and non-GAAP basis. Again, I don't want to turn this into an accounting lesson, but it's just two ways of measuring profit. And it's quite theoretical is the difference, but as you can see, it can make a big difference from a number. If you want me to explain some more to you about that, I will, but I don't want to go into any detail that nobody really wants me to go into. The point here is that Box is profitable, okay? And depending on how you look at it, either it's barely profitable or very profitable, but profitable nonetheless, okay? And I just want to go down here. This is ultimately what cloud collaboration is looking. This is what the market is looking for. Enterprises look to reduce the cost and complexity of their IT environments. They're turning to Box's content cloud to simplify their technology stack, lower their spend, and keep their information secure. That is ultimately the name of the game. So they want to simplify their technology stack. Typically what I'm seeing anyway is a massive growth in low code, and low code means that people can actually put the building blocks in place themselves to build apps, and we do that ourselves, in our own business. Lower their spend. Obviously you understand what that means, and keep their information secure. There's been a big increase in that. So when it comes to Box, its share price has been doing very different things. So over here we can see that the share price did indeed follow the same trajectory, but back here the share price on the 21st of September was $23. It's up now to 25, but there hasn't been that same massive decline since the beginning of the year. And also, if I just go 3 years, 19, if I go to 20, no, yeah, is that if I had bought Box back in 20, the end of 2019, I'd bought it for $16, is now up to 25. And it did go up as high as 30. Is that again, the stock did double, but it has actually maintained some of its growth. Whereas, of course, in the case of Salesforce, it hasn't. So what's the difference? Well, there's only two reasons. Have you got sick of hearing that yet? There's only two reasons the share price will grow. Earnings are growing, or the PE ratio is growing. And what you can see is that the PE ratio, I'm going to say here, the PE ratio, let's say in October 2020, back then was 34.76, whereas back here in 2020, case of Salesforce, I'm going to say October 2020, the PE ratio at the time there was 72. And that's the difference in between the two, is that Box had a much, much, much lower PE ratio. The PE ratio now, interestingly, isn't actually all that different. It's broadly speaking, well, it's 20 in this case, so it's lower than Salesforce's, but it's much closer now in comparison. So that's what I would say as a fundamental investor, is that it's important to remember that, yes, of course, PE ratios can always rise, but they can also fall. And the higher they are, the higher the expectations are built in, the harder the company has to work in order to actually, and of course, to go past them. Would I buy Box now? Look, it's the same question or the same analysis as I've given you throughout the show today, which is that again, this is following the market. We've got a doji going on in Box today. The MTI, of course, is below 1, but from a stock point of view, the RT is also below 1. But the earnings per share is rising. The PE ratio at the moment is falling. We know that. But the RT will tell us when buyers are beginning to get back more interested in a company like this. So in summary, cloud collaboration is it's a really big trend across the world. Cloud collaborating companies, particularly big ones like Box and like Salesforce, have got massive distribution, massive market size, brilliant subscription recurring revenue, varying, of course, reputations. People want different things. Um, but also, when it comes from an investing point of view, it's important to look at PE ratio and earnings per share. Is the earnings per share rising? Where's the PE ratio at? And then the second thing is from a technical analysis point of view, is where's the RT? Above one or below one? Above one is favorable, below one is unfavorable. And of course, for any company, oh no, don't exit. Don't exit. For any company at all you might be interested in, can always, and anybody can do this. If just mention it there in the chat, is that if anybody wants to get a stock analysis report, you can always, for example, here Salesforce. What I can do is I can always pop on in here and I can right click and I can get a full stock analysis report. And that will give me a lot more information. I have focused today on P ratio and RT, but of course you can get a lot more. So let's um, let's make sure now that we are bringing it home. I was at Garth Brooks. Was at a concert last Saturday night of Garth Brooks in Dublin. It was his last ever stadium tour, and it was amazing. But at the end of a song, and where he let the audience finish it off, he'd always say, "Okay, guys, you take it home." So, in order to take it home, what I just want to say to you is that one of the key lessons that is important in investing is knowing the difference between a good stock and a good company. And there's no doubt about it, there's lots of really good businesses in this area. And I've given you the 4 characteristics from this book, Lit Scaling, that I walked you through. And I think that, it's very important to bear those in mind. But when it comes to investing, you need to apply another layer of analysis. Not just enough to look at the earnings reports, say, oh, they've doubled their revenue in 3 years. Brilliant. That remember that the stock is telling a different story, and that is because there was massive expectation built in for. Is it a stock that could rise again in the future? Of course it could. But just remember that the PE ratio is now at a position where investors have much lower expectations. That may change, and the RT will be a good way for you to understand, just to take the pulse and when buyers maybe instead moving forward over the sellers. So on that note, as I say, ladies and gentlemen, thank you very much for being here with me. I know I've gone over time, but I just wanted to answer all of your questions here today. So to make sure that everybody got a good experience. And on that note, I wish you all a fantastic Wednesday. Join us again for the next episode of the ESG and Tech Show. And until then, goodbye and see you again soon.